Guys, there's some great opportunities in the stock market right now, and I'm going to take advantage of it. And what I'm going to do is I'm going to look to double my money on this options trade. And you're probably thinking, options? Darren, wait, options are risky, right? No, let me tell you. Options allow you to use leverage and make a lot of money quickly. However, if you use them right, you can also lower your risk. And should something happen and the stock or the company tank, which this one's not going to do, you're protected and you lose less money than you would if you actually own the stock outright. So in this video, I'm going to jump in and I'm going to show you my favorite trade right now that I'm got on and I'm putting on more, and I'm looking to double my money in just the next few months. Before we get started, if you appreciate the time and effort that goes into making these videos, please hit the like and subscribe button down below. Also, be sure and download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. And if you want to dig in to the options a little bit deeper and take advantage of the leverage as well as the safety, go ahead and check out the paid course. Use the link below and open an account with Moomoo. You can get 8.1% on uninvested cash and free stocks. You also get the free charting software that's great, and I use it every day. It's a zero commission online trading brokerage. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. All right, guys, the stock I'm talking about is SoFi. And let me just show you. I'm going to start off with the earnings. Over the last, I think, 2 years, they have not missed an earnings estimate. Look at this beat. This is market beat. You can see SoFi. SOFI is the ticker. 1 cent, 2 cent, 5 cent, 1 cent, 3 cent. These are all the last quarterly earnings. Q1 2024, Q4 2023, going back to 2023, but everyone was a beat. That's why it's in green here. So Anthony Noto is the CEO and founder. He's one of the best, I believe. But this earnings and the beats is one reason. That's what it comes down to with stocks a lot of the time. But let's jump in and talk about a couple of the articles that I've pulled up here. Should you buy SoFi Technologies? Well, actually, let's start with this one. Prediction: SoFi stock will soar over the next 5 years. Here's one reason why. This is from Jennifer Sable, and she's talking about how it's been crushed over the last year. After doubling, it's down 20% year to date, despite what seems like solid performance. So, why does she think that the title's gonna, or the tide may turn? Is they've expanded their business, and with the lower interest rates, the Fed just cut a half point. There's a good chance it's going to be another half point next month and or in November. So that's going to help SoFi. It helps all the bank stocks, but it gives new revenue sources. So it creates greater cross-platform engagement among current members. So they've got a lot of different ways to make money. I've got this other article that's going to jump into those reasons, but lending is their main business and it's lucrative, but it's highly sensitive to interest rates. So you look right here, lending, you can see that's in the red or the orange here. That's their percentage of their revenue from lending. And then you can see their technology platform, which they have, and their financial services is in the blue. That's growing, and their corporate platform that they sell is great. So they've got a lot of different sources of revenue. The lending segment continues to grow, but non-lending segments are growing much faster. They accounted for 45% of the business in 2024 second quarter, up from 38% a year ago. So they're becoming more diversified. As other segments outpace lending growth, SoFi will become a more stable business with lower exposure to interest rate movement. As the lending segment picks up with the lower rates, then their business is going to explode. So that's why they, in this article, she predicts that over the next 5 years, it's going to grow. I do too. I think it's great. Here's another article by Courtney Carlson. Should you buy SoFi Technology while it's trading below $10? We're, right now, SoFi Technologies has not taken advantage, as we just talked about, of the S&P 500 hitting highs. It's still around the $8 range. The company's added new deposits at a staggering rate, so there's huge deposits, but concerns linger about its credit portfolio. So if there is a recession, which with quantitative easing and the lowering of interest rates, a recession often follows, and a lot of people still think there's a chance of that. So we'll have to watch SoFi. That is the risk. Again, you've got to do your own homework. I'm just letting you know what I'm doing. But I believe SoFi is going to take off. But it started out as a student loan specialist and use technology more efficiently to handle that process. And then in 2022, they acquired Golden Pacific Bank Corp. And that gave them a banking charter that allows it to hold customers' deposits and make loans. So they are a legitimate bank. They don't have brick and mortar like Wells Fargo and Bank of America. They're more of a technology company. So that's another point. If it's valued as a technology company, I think the value and the PE can be much higher. If they value it as a traditional bank, it's still going to do well, but those PE ratios are lower. The move came at a good time for SoFi ahead of the interest rate cuts. It raked in $1.3 billion in net interest income, up over 400% from 2021. So it's had solid growth, with net income increasing 55% year over year to $815 million. So they're killing it right now. Deposits have grown to 23 billion, and it's got high yield savings accounts because of the Bank Corp acquisition. And they currently offer very high APYs, so they can advertise that and get more customers. They've got 105 million in net income this year, up from 82 million. So that's huge growth, and it's due to their new customer acquisition. They've invested in Galileo and Technisys to build the technology platforms to help bring banking products to non-bank companies. So Galileo is the back-end infrastructure for fintechs without the banking charters like SoFi has. So they can, utilize other banks and sell them products. Technisys replaces decades-old legacy systems, and it helps these other banks innovate quickly. So there's definitely a need for it, and it allows these other banks to process and analyze data in real time. So they hope to become the next Amazon Web Services, but of fintech. So huge growth opportunity there. SoFi can also be a source of stability thanks to its long-term contracts. So the contracts that it has in place are long-term. And you can see the first half of this year, their technology platform net revenue was 190 million, up 15% from last year. And the profit margin was 33%. What's next? The personal loan portfolio ticked up 3.84% from 2.94%. So with those interest rates lowering, that should help. But again, the concern is the charge-offs from student loans that are coming now due. Biden's student loan forgiveness or whatever is ending. People have to start paying off their student loans now. I've got two kids that just finished college, and I know about these. SoFi is well positioned to benefit. For one, Noto has SoFi will continue to offer higher interest rates than competitors, so that's going to continue to grow their business. And further rate cuts will help as well. Is SoFi a buy? I think I don't know who doesn't think it's a buy right now, but their earnings have improved. The analyst expectations have improved. Their net income will be 173 million, followed by 320 million in 2025, and then 577 million a year after that. So the bottom line, interest rates should help. But again, no other banks, Wells Fargo, they're huge. These guys have so much room for growth. It's unbelievable. So that's why I like it. And if we jump into the trades that I'm doing in SoFi, so it's an inexpensive stock. It's $7.95. So the way options, you utilize options. You could buy 100 shares of this, actually just the stock, for $7.95 times 100 shares, $795. But what I'm going to do is use LEAPS options. So out over a year. So I'm going to go out 474 days to January. I'm going to open that up. I'm going to click on it. This is the Tastytrade platform. There's a link down below. This is a great option trading platform. I use Tastytrade and Moomoo. But I'm going to look for the deep in the money call. So it's trading at $7.95. This line is where it's trading at. I'm going to look at the 4 strike and out over a year, and I'm going to click on the calls are on the left, puts are on the right. I'm going to click on the ask or the buy to buy this option, $4.70. There we go. And here's the mid price, $4.55. So that's probably where we're going to get filled out or close to that. So I'm going to click on that. You hit review and send and place the trade. But what I want to show you is go to the curve mode here. So we're in table mode right now, and we're on the trade page. So again, trade page, open up 474, click on the call to buy, and then we can go here to the curve mode, and then you can see and make sure you have the analysis tab clicked. If you take that off, it gives you this, but we want that on, and then you can see if we get, so we're paying $4.55, so that's going to take us longer to profit because we got to cover this $4.55 that we paid. But you get up to 8.5, and then it grows just as if you own the stock. And again, I'm thinking the price of SoFi, if you look back, it was just back earlier this year, it was up at 10. But if you look back before that, let's see, if we go to the weekly, where was it? It was up here, 23, but no, it was higher than that. What was the highest it was at? Let's go to the month. Okay, 27, 28. So it was at $28. But now let's go back here. If it gets up to, with a $455 investment, if we go over here to $28, it doesn't even go up that high. But if you get up to $21, your profit up here, P&L at expiration, is $1,245. So $1,200, so that's more than double your investment here if it gets up to that 20. And they're going to continue to beat earnings. I think they're going to do really well. But where do we double our investment? At $455, so basically $900 would be doubling our investment. We need to get up to, yeah, about 17. So we need to get in the $17 range from 8. So it is a double, and then we double our investment. But it moves just like the stock price. So we hit review and send, and we place the trade. But I like being able to, for half the cost, control 100 shares. So $455. If you were to purchase, 10 contracts, that would be $4,555. And then you double that, you're at $9,000, and you can double your money. So that's what I'm looking to do with SoFi. And let me know if you like SoFi as well. And we'll see when earnings come out. Let's see when they come out next. If we look at preview, November 4th is when earnings are coming out. So let me know your thoughts on SoFi. All right, guys, I put a link down below for the free options workshop. Be sure and grab that. Remember to hit like and subscribe. Join Moomoo. Get your free stocks. Leave a comment, ask a question. I answer every one. Let me know what you're trading and why. I'll see you in the next video. Thanks for watching.